This is your LMAX exchange technical update for Monday, August 15th, 2016. Euro dollar. So the euro continues to be pressured to the downside as it fails by the 100-day moving average. This keeps the pressure focused lower, with the market now seen potentially back towards next critical support in the form of that low from the 24th of June at 109.12. At this point, only a break back above the 100-day moving average would compromise the immediate bearish outlook for the euro. Sterling dollar. So cable is well on its way down towards the retest of that plus 30-year low from July, just under 128, as the market remains very well pressured to the downside. At this point, it would take a break back above a recent high that came in at 133.72. That's going back to the 3rd of August to really officially alleviate immediate downside pressure. Until then, the risk remains focused firmly on the downside, with a break below 128 to open the door for the next major downside extension towards key psychological barriers at 125. Dollar yen. So as you can see here, dollar yen remains confined to a well-defined downtrend, and the market looks to be in a consolidation ahead of the next downside extension towards a retest of that 2016 multi-month low at 98.99. A breakdown below there could open the door for as much as a move down, a major downside extension down towards the 90 to 95 area. At this point, on a short-term basis, only back above the high that we saw on the 8th of August at 102.65 would take the immediate pressure off the downside. Euro Swiss. So Euro Swiss remains confined to a choppy consolidation. The range is defined by 109.45 roughly above and 107.78 below, and a break on either side of this range will be required for clear directional insight. Aussie dollar. So Aussie is showing signs of stalling out ahead of that 2016 high at 78.35. That was a high that was set all the way back in April 2016. And it looks like the market is stalled out at 77.58 ahead of this latest decline. At this point, look for deeper setbacks over the coming sessions towards next critical support, which comes in the form of that 27th of July low down at 74.21. At this point, only back above 77.58 will negate the bearish outlook. Dollar CAD. So despite this pullback in dollar CAD that we've seen over the past several days, the market actually remains quite constructive after triggering a major base several days back. The breakout above 31.89, that was the high that was in place going back to May 24th. That breakout occurred back on the 25th of July. That was a significant development, setting the stage for a major upside extension towards the 135 to 140 area. And so this latest pullback is viewed as nothing more than corrective and should be supported towards 128 in favor of the next major upside extension and breakout towards that 135 to 140 target. Really, only a daily close below 128 would give reason for a bit of a pause, but though it wouldn't negate the bullish constructive basing outlook. Kiwi dollar. So Kiwi gains have just exceeded that 2016 peak, that previous peak that we had seen on the 12th of July, trading all the way up to 73.41 ahead of this latest sharp reversal. At this point, it looks like the market is stalled out and could be looking for deeper setbacks ahead, and this will be confirmed or strengthened on a break below 70.87, the low that we saw on August 8th, which will then expose 69.52 further down. SPX 500. So the S&P 500 is trading at record highs last week again, fresh record highs we saw on Thursday, and could be poised for fresh upside towards 2200. But overall, these rallies look to be stalling out and kind of exhausted, and we could see another topside failure ahead of a major corrective pullback. But ultimately, 2147, that's the low that we saw on the 2nd of August, is the critical level to watch, and a break below that level is required to strengthen this outlook and accelerate declines. Until then, the pressure remains firmly on the top side. Gold. So gold has been locked in a consolidation of late, though overall here the structure is highly constructive, and any setback should continue to be very well supported towards 1300 in favor of the next major upside extension above 1375, that 2016 high, and towards 1400 to 1450 further up. Really, only a close back below 1300 will give reason for pause.